President Trump said the United States could eliminate income taxes over the next couple of years due to tariff revenue. Joining us to discuss is Daniel Lacalle, chief economist at Tressis, international financial analyst and author of the book Freedom or Equality. So Daniel, good to see you. What is your view on the likelihood and feasibility as well of tariff revenue completely replacing income taxes?
Hi, Don. Well, obviously, completely replacing income taxes, very difficult. Income tax receipts go up to $2.4 trillion. The latest figures that we have from tariffs account for revenues of about 24 billion a month. So that would be a little bit more than 300 billion in a year if everything remains the same. I think that what President Trump is trying to convey is the following, is that there could be a substantial reduction of income taxes, particularly for the lower end of the income tax bracket, that could even end up eliminating the income tax for the lower range. But eliminating entirely the income tax seems very, very difficult, certainly from a revenue standpoint. There is another way of doing it, obviously, which is by reducing dramatically government spending. But we also must acknowledge that it's quite unlikely that any administration is able to reduce government spending by the equivalent of 2.4 trillion, because it would include a very, very significant part, or actually almost more than half of mandatory spending. Therefore, I think that what President Trump is actually looking at is probably eliminating the lower end of the income tax bracket entirely. And that actually could be feasible.
Okay, so Daniel, whether we're talking about eliminating it completely or partially, I mean, in principle, the plan could stimulate economic growth, right, by reducing the tax burden on workers.
In any shape or form, any measure that we have discussed actually a couple of times, like, for example, reducing tax, even providing a check from the extraordinary revenues coming from tariffs, etc., any of those measures are going to be positive for consumption, for economic growth, and for the improvement of the manufacturing and the services sector within the United States through domestic demand. Any of those measures will be positive. But we also have to acknowledge that the first thing that the United States needs to do is to rein in the enormous fiscal burden that has been inherited from the Biden administration, with a deficit that stands close to the 2 trillion figure. The first and foremost policy needs to be eliminating, or certainly bringing that deficit to the lowest level possible.
Okay, Daniel, could you just address some concerns out there on this plan? For example, hypothetically speaking, if the U.S. were to impose $2.4 trillion of tariffs a year, what would be the impact on trade and the economy?
Well, certainly 2.4 trillion in tariffs is a phenomenal figure, and it looks almost impossible to achieve if you look at it from the figures of imports into the United States. But let's assume that it would happen. Let's assume $2.4 trillion of tariffs from abroad. It would definitely reduce international trade with the United States, absolutely, because let's assume that the entirety of those tariffs are absorbed by the producers abroad. Even if that were the case, it's going to make it very, very difficult for those producers to go to the U.S. market in the shape and form that we see it today. So, in essence, it would certainly have a very, very dramatic impact on international trade. It would certainly also create the desire from other governments of imposing very aggressive tariffs against the United States if it's as successful as to reach the levels of revenues that make it possible to eliminate such an incredibly receipt-heavy tax as the income tax. No, so I don't know. It's very, very, very challenging to think that something of this magnitude can happen. I think that the opportunities are that are more feasible are in a reduction in taxes for the U.S. citizens, maybe even the possibility of a check if the revenues are exceptional, and certainly now that the waters of trade agreements have settled, and we know that next year there's going to be a significant level of growth in international trade, and there will be very, very low implications of these tariffs on inflation, then at least what we know right now is that there could be revenue positive and growth positive measures that may not entirely eliminate the income tax, but would certainly improve the domestic economy. At 2.4 trillion of tariff revenues seems to be in any shape and form almost impossible.
Okay, let's say we get a partial reduction in income taxes through tariffs. The question still remains, though, are tariffs a sustainable revenue source for a country?
Well, if it continues to be a growth economy that the rest of the world wants to sell to, absolutely they are. In fact, if you look at China, if you look at Brazil, if you look at the European Union, we talk a lot about tariffs in the United States, but we don't talk about the tariffs and non-tariff barriers that these economies continue to implement, and it seems that nobody is creating a big fuss about it all. So are they a measure that is leveling the playing field in trade, and that at the same time is strengthening international trade and improving the situation for United States companies with non-inflationary effects? Yes. Are they a magic wand that can generate perpetual revenues forever and increasing those revenues? Not necessarily. So I think that we need to be balanced. I think that the measures that have been implemented this year have proven to be positive for the economy. The economy is growing at a 4% annualized rate, according to the Atlanta Federal Reserve. They have not created inflationary pressures. The latest estimates from Bloomberg Economics show that inflation in the next month is going to be at the same level as it was in August and lower than in September and October last year. And at the same time, we are seeing that it's generating significant revenues and that the deficit is being reduced. Then there are a lot of positive elements. What we need to see is the effect in 2026 and 2027. If, as I expect, the deficit of the United States is going to drop down significantly in terms of GDP and also in absolute terms. And at the same time, we're going to get a stronger economic growth, more manufacturing, and a better service economy. All those elements then are likely to generate a positive outcome. And I think that that is undeniable right now.
Yeah, I mean, those are all positive outcomes. Daniel, maybe you can just address one more concern here. And that is, do you think announcing tariffs will fund U.S. government operations? Sort of leave a bad taste in other countries' mouths? Because I believe you said before other countries pay for these tariffs. So would tariff-targeted nations think the U.S. is basically exporting its tax burden onto them?
It's a great question, but ultimately, if you think about it, that's what all governments do, don't they? When they are imposing CO2 taxes on U.S. companies, when they're imposing the different regulatory taxation and tariff and non-tariff barriers on U.S. companies, they are doing it and saying to their citizens in their countries that they're doing it to fund policies and programs in that country, no? So yes, absolutely, taxation and trade measures are all taken to try to improve the situation or to try to pay for programs in the country. But that is not only in the United States; it's also in other countries. What you're absolutely right is that there is a completely biased narrative all over the world in which it seems that the only country in the world that puts tariffs is the United States, which is false. And it seems that the only country in the world that wants to pay for an improvement in the conditions for their own citizens is the United States, when China, when the European Union, when India themselves are actually doing exactly that, using the trade, tariff, and taxation barriers to fund programs or supporting local industries.
Very good points there, Daniel. Thank you for speaking with us today.
Thank you very much, Don. Have a good day.